Money is changing, not in theory, but in real time. Across the globe, governments are quietly building the next evolution of currency, one that isn't printed, mined, or held in your wallet. They call it CBDC, central bank digital currency. To some, it's the future of finance. To others, it's the ultimate surveillance tool. A central bank digital currency isn't cryptocurrency. It's not decentralized, and it's not speculative. Think of it as digital cash, issued directly by a nation's central bank, the same institution that prints your dollars or yen. But unlike the bills in your pocket, this currency is programmable. Every transaction can, in theory, be tracked, time-stamped, and even restricted. That's the promise, and the peril, of government digital money. The official story sounds practical: efficiency, transparency, financial inclusion. A digital dollar, yen, or euro could move instantly. No intermediaries, no wire fees. It could expand access to the unbanked and make tax collection seamless. But behind the policy papers and press releases lies a more strategic motivation: control. In a world of rising debt, unstable currencies, and shifting power blocks, governments see digital money as a way to reassert monetary dominance and reduce dependence on private banks or cryptocurrencies. Today, more than 130 nations are exploring or piloting digital currencies. China's ECNY is already live in dozens of cities. Europe is testing the digital euro. And the United States, though slower to act, is quietly researching its own digital dollar project. This isn't just a financial experiment, it's a geopolitical race. A contest to define the architecture of tomorrow's global payment system, and, with it, the power to track and influence capital flows across borders. There's no question, CBDCs could make payments faster, cheaper, and more inclusive. Imagine stimulus funds distributed instantly during a crisis, or small businesses receiving real-time tax credits. But then imagine this. Your money has an expiration date, or you're blocked from spending on certain goods deemed non-essential, or your balance adjusts automatically based on your carbon footprint or social behavior. That's not science fiction. It's programmable money, and it exists within the logic of every CBDC prototype today. For investors, CBDCs introduce a paradox. They could stabilize payment systems, yet destabilize private wealth strategies. Assets like Bitcoin, gold, and real estate could see renewed demand as hedges against centralized control. Meanwhile, fintech innovators are racing to build privacy layers and decentralized systems that interact with government currencies, without surrendering autonomy. The smartest capital today isn't reacting to CBDCs, it's positioning around them, building the infrastructure of what some call the post-bank era. The future of money isn't just about technology, it's about trust. Will people trust their governments to manage every transaction? Or will they demand the freedom to choose how and where their money moves? The truth about government digital money isn't black or white. It's the gray space between innovation and control, where every nation, business, and investor must now decide. Are you adapting to the system, or preparing to operate outside it?